Welcome to EduTap and welcome to today's Finance 360-degree session. So today we are going to discuss a very important master direction that the RBI has recently released, and the RBI has issued the master directions on the authorization to operate a payment system. So this is recently released, that you can see that on 15th of June 2026, the RBI has released this master direction regarding the authorization to operate a payment system. Now there are different direction, like there are different facts that you have to remember from the examination point of view. What are these facts? What are the points that you have to remember from the examination point of view, that we will discuss, okay? And only the most important points we will be focusing on, that are important from your phase 2 perspective in the examination, okay? So let's get started without any delay. This is a article that the RBI has recently released, so this is under the RBI notification section, okay? So RBI has issued the master direction on authorization to operate a payment system. Now this is the direction of the RBI that the RBI has recently released. This PDF will be provided to you in the Telegram channel. As soon as the Telegram channel starts operating again, the PDF will be uploaded in the Telegram channel only of EduTap. Okay. So first of all, I hope I'm clearly audible and the screen is clearly visible. I hope there is no issue that is coming. Okay, so now let's start with today's session and let's start with the master direction on the authorization to operate a payment system. So in the RBI press release also, RBI announced that the RBI has issued this master direction. In the press release, only the basic information was provided, that under the statutory powers conferred upon it. So that means the Reserve Bank of India, as per the RBI Act of 1934, the RBI has the statutory powers, the legal powers. So there are the statutory powers conferred upon it by the RBI Act 1934, as well as the RBI has the statutory powers under the Payment and Settlement System Act of 2007. Okay, so statutory powers, they come from certain act. So like the SEBI Act is there, that provides the statutory powers to SEBI. Similarly, the RBI has the statutory powers that is provided through the RBI Act of 1934 and the Payment and Settlement System Act of 2007. So here, under the statutory powers conferred upon RBI by the Payment and Settlement System Act of 2007, RBI had issued various directions for the operation of a payment system. Okay, for the operation of the payment system, like the IMPS, Aadhaar enabled payment system, the Bharat bill payment system. So all of these different payment systems that we use, so they come under the Payment and Settlement System Act of 2007, and for them there are certain rules and regulations that have to be followed. And these payment system, they are operated by the payment system operators. Okay, so like the NPCI operates IMPS, Aadhaar enabled payment system. There is the, like the MobiKwik wallet or the Amazon Pay. So they are operated by different entities. So they are the payment system operators that are operating the payment system. Like the Bharat bill payment system, that is now known as the Banking Connect. This platform is operated by the NBBL, that is NPCI Bharat Bill Pay Limited. So there are different payment systems that are operated by the different payment system operators, for which the rules and regulations are laid down by the RBI under the Payment and Settlement System Act of 2007. Now the RBI had issued various directions for operation of a payment system. Today the RBI has issued, that is on 15th of June, the RBI has issued master direction on the authorization to operate a payment system. Okay, so RBI has issued the master direction on the authorization to operate a payment system, which consolidates instructions that were provided previously under different notifications, under the different guidelines. There were the directions that were provided for the authorization to operate a payment system. Now, all of these directions have been compiled, and the master directions on authorization to operate a payment system, which entities can be authorized to operate a payment system. Okay, so for that, a master direction has been released, and all these guidelines have been merged or have been compiled under the master direction. So you do not have to go through the multiple different directions, just the direct master direction has been provided by RBI. Okay, now this consolidation exercise is carried out in continuation with similar exercise being carried out by various departments of RBI to enhance the clarity, ease of access, and reduce the compliance burden of the regulated entities. So rather than following the different guidelines, the RBI has consolidated the important guidelines in one master direction. that is for the authorization of the payment system operators. And here under this master action, the idea is clearly provided, or the clarity has been provided, and the rules and regulations have been rationalized also. Okay, so this is the master action on authorization to operate a payment system. Chalo. Now, who are the payment system operators first of all? Now, before understanding the master action for the authorization to operate the payment system, so for the payment system operators, the directions are there. Now, what are the payment system operators? Who are the payment system operators? First, let's understand this, that so that you have the idea that how they are authorized by RBI and such. So, first of all, certificate of authorization is issued by RBI under the Payment and Settlement System Act 2007 for setting up and operating the payment system in India. So, if any entity, let's say an NPCI, also wants to release a new payment system, so for that, the RBI provides the certificate of authorization to the entity uh, under the payment and settlement system for setting up and operating the payment system in India. So NPCI has that authorization. So name of the authorized entity. So now this list is as of June 10, 2026. So this list is also new, and you do not have to remember the list. This is just an example so that you have the idea that who are the payment system operators. Okay. So, Payment and Settlement System Act 2007, along with the Board for Regulation and Supervision of Payment and Settlement System Regulations 2008 and the Payment and Settlement System Regulations 2008, have come into effect from August 12th, 2008. Now, the Board for Regulation and Supervision. So, now these directions, like the act as well as these regulations, they have come into effect from 12th August 2008. The list of payment system operators authorized by RBI to set up and operate in India under the Payment and Settlement System Act 2007 is as under. So these are the payment system operators that have been authorized by RBI to set up and operate the payment system in India. So first of all, the first name is NPCI. So National Payments Corporation of India, that has the authority to release the retail payment systems. Okay, so here the NPCI has released NFS, IMPS, the NASH, the Aadhaar enabled payment system. Operation of check truncation system is under the NPCI. Unified payment system, that is UPI. So there are multiple different payment systems that have been allowed as the NPCI has released it, and the NPCI is the authorized entity that has the certificate of authorization, and they have the certificate so that they can release these payment system. Okay, so that is the idea. Next is central counterparty like the AMC Repo Clearing Limited. It is the authorized entity that is providing the payment system, that is repo transactions in corporate debt securities. So the repo transactions, that is the borrowing and lending that happens with the collateral of the corporate debt securities. So for that, the payment system is provided by the AMC Repo Clearing Limited. NPCI Bharat Bill Pay Limited, that is the wholly owned subsidiary of the Reserve Bank of India. So it provides the payment system, that is the Banking Connect. Then there are the card payment networks, because if you are using the credit card or the debit card, you are using the credit card or the debit card, they are operated through the card payment networks, or they are operational through the card payment networks. So American Express, Diners Club, Mastercard Asia, the NPCI that has the Rupee indigenous card network, Visa Worldwide. So all of these, they are the card payment networks that help in the operation of the credit card and the debit card. So these payment systems are there. Okay. Then prepaid payment instruments like the Amazon Pay. So Amazon Pay India Private Limited, it provides Amazon Pay balance money. The One MobiKwik Systems Limited, it provides MobiKwik wallet. So these are the authorized payment system operators that are allowed to provide some payment system, some wallet, digital wallet, or the the credit card or the debit card that is run through the card networks. So that is the basic idea. I hope this is clear, that there are multiple payment system operators. There are multiple payment system operators that are operating one or another kind of payment system, so that the payments can happen smoothly between the people, or between the merchant and the customer. Okay. So person to person and the person to merchant transfers can happen smoothly. The transactions can happen smoothly. That's why there is the payment system operators that provide the payment systems. Now, there is also the trades platform, the trade receivables discounting system, so that the MSMEs can get the money when they require against their bill invoices. So there are different trust platform like the RXIL, Mint Solutions, Credix, C2FO, A Trends that are providing the different trades system that are the payment system so that the MSMEs can get the money and the MSMEs can get the funds against their bill invoices so that the payment system can happen smoothly, the payments and the transaction can happen smoothly. So there is Invoice Smart, C2 Trades, DTX, M1 Exchange, RXIL, all of these are the trades platform that are providing the payment system, that are providing for the transactions, okay, and the authorized entities are these. So this is the idea that the payment system operators, they run the payment system, they run some platform so that the transactions and the payment can happen smoothly in a particular domain. So now the RBI has released the master directions on the authorization to operate a payment system so that the all the different guidelines or the directions have been compiled here so that the clarity is provided for the payment system operators. Okay, chalo. I hope till now there is no confusion. Any confusion, anyone till now? Clear? So all clear, right? Chalo, moving forward. So now, master actions on authorization to operate a payment system. Under the statutory powers conferred upon it by the Payment and Settlement System Act 2007, RBI had issued multiple directions for operation of a payment system. So we know that upon under the statutory powers conferred upon RBI by the Payment and Settlement System Act of 2007, RBI had issued multiple different directions, multiple different guidelines for operation of a payment system. Now, all these different directions, they are compiled and they are rationalized. They are provided under the master direction on authorization to operate a payment system. RBI has now consolidated its earlier circulars and guidelines on authorization to operate a payment system into a single master direction, which comes into effect immediately. Now, the applicability, these directions, they apply to an entity applying for authorization to operate a payment system. So these directions, they are applicable on any entity who wants to operate a payment system. So if a new entity wants to operate a payment system, so these guidelines will be applicable on such entities that want to operate the payment system. They want to become the payment system operator, as well as an entity already authorized to operate a payment system. The entity already has the authorization to operate the payment system. They also have to fulfill these directions. So key highlights of the amendment direction is that the authorization to operate a payment system is available on tap basis. That means whenever you want to send the application, let's say an entity wants to operate a payment system, let's say some XYZ entity wants to have its digital wallet. So if the entity wants to operate the payment system, so authorization can be taken at any point of time from the RBI. There is no fixed duration that in this duration or in this timeline, if within these months, you have to take the authorization. So there is no fixed box or there is no fixed timeline in which the entity needs to take the authorization from the RBI, that the authorization will only be the authorization will only be provided between June and August. This kind of limit is not there. So authorization to operate a payment system is available on an on tap basis, that whenever you send the application, the RBI will look into that application, that you are eligible to become the payment system operator or not. So you can send the application whenever you want, the entity can send the application whenever they want. It means applications can be submitted by the eligible entities at any time and not only during a fixed RBI notified window. So there is no fixed RBI notified window. Whenever you want to send the application, the entity can send the application. There are certain eligibility criteria and requirements. So the entity promoter, see the entity that wants to become the payment system operator. So XYZ entity as well as the promoters of that entity. Promoter means a person who, by virtue of his ownership of voting equity shares, so that means this person has the shares with the voting rights. So the person is the shareholder with the voting rights and is in effective control of payment system operator. So a promoter is someone who is the shareholder with the voting rights and they also have the effective control of the payment system operator. So these are the promoters. So promoter is a person or the relative of the person who, by virtue of the ownership of the voting equity shares will be or is in effective control of the payment system operator. Okay, is in control of that entity basically. Promoter group. So promoter group, basically, let's say the promoters, they have invested in certain companies, and the promoters, they have a major shareholding in the companies, or let's say certain companies have invested in the promoters or the promoter companies. Let's say promoter has multiple companies. Let's say the promoter, let me open the so basically, let's say the entity that wants to become the payment system operator. So it has certain promoters. Now this entity has certain promoters. The promoters are the person. A person means individual or the entity who, by virtue of their ownership of the voting equity shares, they have effective control of payment system operators. They have effective control of the payment system operator. Okay, so they have effective control of the entity. So the promoter, now promoter groups basically means the promoter groups basically means that they belong to the promoter group. They belong to the group of they belong to the promoter group. Now promoter is an entity. Let's say in case the promoter is an entity, so it has invested in different companies, or a promoter is an individual which has invested in the different companies. So in this case, the companies in which the investor has, the promoter has, the individual has the huge shares, the majority shareholding. So in this case, these companies will come under the promoter group. Or let's say the promoter, uh, like, has the body corporate or the company in which certain companies have major shareholding, so they will also come under the promoter group. So promoter group consists of the companies that are related to a individual, or that are related to the individual, that is the promoter, or the entity, that is the promoter. Okay, so they come under the promoter group. Joint venture of the promoter, or the associate of the promoter, the associate company of the promoter, or the related parties of the promoter that belong to the same group. Or let's say the promoter has invested in certain companies and has the majority shareholding or major shareholding in those companies, so these all companies will come under the promoter group, as they are related to the promoter that has huge power or effective control over the entity that wants to become the PSO. I hope this is very much clear. Okay, so the entity itself, as well as the promoters of the entity, the direct promoters of the entity that have the control over the entity, as well as the promoter group, that means the companies, if they belong to the same group, the promoter has a certain control over the companies, or the companies have control over the promoter. In this case, they come under the promoter group of a PSO, of a payment system operator, shall conform to the Reserve Bank's fit and proper criteria. That means the entity shall have a past record of sound credentials and integrity. The director of a promoter company or group company shall have a record of financial integrity, good reputation and character, honesty, etc. Such person shall not have incurred any of the following disqualifications. That means the person should not be convicted by a court for any offense involving moral turpitude, moral degradation, or any economic offense, or any offense under the laws administered by the RBI. The person should not have been declared insolvent and not discharged of the duties. So basically, the person shall not have incurred any of the following disqualification. They should not have been declared insolvent and such. They should not have been found to be of unsound mind by a court of competent jurisdiction, and the finding is in force. And they should not be financially not sound. Okay, so these are the criteria that the entity that wants to become the payment system operator, as well as the promoters of the entity, the promoter group related to the promoters and such. So of an entity that wants to become the payment system operator, they should have the fit and proper criteria, as well as the uh, entities that are already working as the payment system operators, their promoters, the entity itself, their promoters, and the promoter group, they should also follow they should also follow the fit and proper criteria. It's not like that after you have got the authorization, after that you can get away from these eligibility criteria. No, if you have become the payment system operator, then also you should follow these criterias. Okay, if you want to get the license, if you want to get the certificate, or if you have already got the certificate, doesn't matter. If you are a payment system operator, or the entity that wants to become the payment system operator, you should fulfill these criterias. Okay, investment in entities from FATF non compliant jurisdictions. Now coming to the next point. So the Financial Action Task Force periodically identifies the jurisdictions with weak measures to combat the money laundering and terrorist financing in its following publications. The high risk jurisdiction subject to a call for action. Jurisdictions under increased monitoring. So basically, the Financial Action Task Force periodically identifies certain countries, certain jurisdictions with weak measures to fight against the money laundering and terrorist financing in its following publications: the high risk jurisdictions and the jurisdictions under increased monitoring. A jurisdiction whose name does not appear in these two lists, that means that jurisdiction is the FATF compliant jurisdiction, good jurisdiction, which is complying with the rules and regulations and which is having strong measures to combat money laundering and terrorist financing. If the names are in the list, that means they are non compliant jurisdiction. If the names are not in the list, that means they are compliant jurisdiction. Investment in payment system operators from the FATF non-compliant jurisdictions shall not be treated at par with the compliant jurisdiction. So basic idea is that if the investment is coming to the payment system operators from the compliant jurisdictions, that means they are the jurisdictions that have strong measures to combat money laundering and terrorist financing. If the investment is coming from the non compliant jurisdiction, so there should be some restrictions because they are non compliant jurisdictions. That is the idea. So fresh investment, whether made directly or indirectly into the payment system operator from investors or entities belonging to FATF non-compliant jurisdictions shall in aggregate be less than 20% of the voting power, including potential voting power of the payment system operator. So as I have told you that if the investment is coming in the payment system operator from the non-compliant jurisdiction, then there should be certain limitation, that is 20% of the voting power. Okay. So this is the limit. Next is validity period of certificate of authorization. So authorization to operate a payment system to a new entity will be given on a perpetual basis. So the authorization to operate a payment system, the authorization to operate the payment system to a new entity will be given on a perpetual basis. That means there will be no ending. If you have got the authorization, this authorization will be on perpetual basis for the end, till the end. Okay. So there is no timeline that the authorization will be only for 5 years or 10 years, only for 7 years. No, there is no timeline as such. If the authorization has been given to you, you will be able to continue your payment system for the perpetual basis, but you should be fulfilling the eligibility criteria. You should be in the fit and proper condition, and RBI should not feel that you are not doing the functioning in a proper manner or you are harming the public interest. So authorization, if it is provided once, it is for the perpetual basis. Okay. Any confusion, anyone? No confusion, all clear? Chalo. Next is existing PSO, existing payment system operator who do not satisfy the conditions of authorization. That means they do not fulfill the eligibility criteria, they do not fulfill the fit and proper criteria, will be given 1 year renewal to enable them to comply. Okay. So if let's say they do not satisfy the conditions of authorization during whenever an entity is provided with the authorization to work as the payment system operator. Okay. So whenever an entity is authorized to work as the payment system operator, there are certain terms and conditions that are also laid down, that you need to fulfill the fit and proper criteria, you need to have the minimum net worth of this much. So there are the fit and proper criterias and the terms and conditions that are laid down. So the entity should fulfill these conditions. If the entity is not satisfying the conditions, then 1 year timeline is provided for the entity to satisfy the conditions. Okay. Let me open the explanation doc. So basically, let's say an entity has got the payment system operator authorization. Okay. Now, if it is a new entity, that has got the payment system operator authorization under the new directions. That means it is fulfilling the fit and proper criteria. It is already having the net worth criteria, or it is fulfilling the terms and conditions. Okay, because this is a new entity that, as per the new directions, have got the payment system operator authorization. But let's say there is an existing entity. There is an existing entity that got the payment system operator authorization 2 years back, 5 years back, or 7 years back, let's say. So now this payment system operator entity, it got the authorization on the basis of certain terms and condition that it has to fulfill on the continuous basis. It needs to be healthy, it needs to maintain the good financial condition, it needs to have the minimum net worth criteria, it needs to have the good sound professionals or the promoters and such. So if the older PSO, if the older payment system operator or the existing payment system operator, if it is not fulfilling the terms and conditions, or it has been found by the RBI that it is not working in accordance with the public interest, or it is not having the proper interface, the proper system, so RBI can ask the payment system operator that you have 1 year timeline to fulfill the criterias and to resolve the issues. So 1 year timeline is provided for the older PSOs. Okay, for the existing PSOs. That is the idea. So authorization to operate a payment system. So basically, the validity period of certificate of authorization. So authorization to operate a payment system to a new entity will be given on a perpetual basis, that this authorization will continue till the end. Existing PSO who do not satisfy the conditions, the terms and conditions that were laid down during the authorization that was provided by the RBI, will be given 1 year renewals to enable them to comply. As well as if they are not fulfilling certain terms and conditions, or they are not having the proper interface, or their interface is having any problem, that is, they are not working in the direction of the public interest to some extent, or there are certain facilities that they are providing that is not complete, that is not very beneficial, so there is a 1 year renewal time period that is provided to them to comply with the RBI changes, to comply with the RBI directions. Okay, this is the idea. Next is voluntary surrender of certificate of authorization by PSOs authorized under Payment and Settlement System Act 2007. If a PSO authorized under the Payment and Settlement System Act intends to discontinue its operations, it must apply to the RBI for voluntary surrender of its certificate of authorization. A PSO needs to submit a request in writing signed by its authorized signatory to Department of Payment and Settlement System RBI. Okay, if a PSO is unable to fully extinguish its liability, that means let's say the Paytm wallet is there, the Paytm wallet is there that used to take the money from the customers, like we used to keep our money in the Paytm wallet. Okay, let's say I'm keeping 1,000 rupees, someone is keeping 100 rupees, someone is keeping 200 rupees in the Paytm wallet. So in the Paytm wallet, that was the digital wallet that the public can use, that the people can use. Now its registration or the authorization is getting cancelled. So what happens that the if the PSO, payment system operator, like the Paytm company that was running the Paytm wallet, so payment system operator, if it is unable to fully, like when its certificate of authorization has been cancelled, or the certificate of authorization has been revoked, so if the payment system operator is unable to fully give away the money to the customers, or to fully extinguish its liabilities, that is the money that it has taken from the customers, that it has the obligation to return. So at the time of surrender or cancellation of certificate of authorization, if the PSO is unable to fully extinguish its liability, now this money cannot be treated as the money of the PSO, because this is the money of the customers, or this is the money of the merchants. So the PSO should submit an undertaking, a declaration to the effect that it will not recognize the existing balance amount in the third party account, in the escrow account. This is the money of the customers or the merchants. So this is the money to the customers or merchants or the agents, etc. So this will not be taken in the income or transfer it. So the payment system operator will not consider this money as its income, or will not transfer it to profit and loss account for 3 years. So this is the idea, that the PSO has to submit an undertaking that whatever liabilities it has, whatever money of the merchants, whatever money of the customers, whatever money of the agents, that the payment system operator has in its wallet, in its payment system, so this money will not be recognized in the in the income of the payment system operator or will not be recognized in the profit and loss account of the payment system operator for the 3 years from the date of cancellation of certificate of authorization. And the payment system operator would honor the claims from the customer, from the merchant, from the agents for the period of 3 years. So this is the idea that if the cancellation of the if the payment system operator authorization has been cancelled, or the payment system operators has surrendered the certificate of authorization, so for 3 years, whatever liability it has, that is the money of the customers, the money of the merchants or the agents, that the payment system operator has the liability to return, right? So for 3 years, this money will be kept in the escrow account, that is the third party account. This money will not be treated as the income or will not be transferred to the profit and loss of the payment system operator. So for the 3 year, this is the timeline that is provided for the customers, merchants or agents to claim back their money. That is the idea. And for 3 years, this money will be kept in a escrow account, in a third party account, and the payment system operator has to honor the claims of the merchants, customers, or agents during the set period of 3 years. Subsequently, after acceptance of request, now RBI, from the RBI side, what RBI will do, after accepting the request for voluntary surrender, a press notification would be issued by RBI containing the clause that the customers or merchants having a valid claim on the entity as the payment system operator can approach it for the settlement of their claims within 3 years. So 3 years time period is given for the customers and merchants to settle their claims to get back the money. Okay, from the date of cancellation of the certificate of authorization, the entity shall submit, like after 3 years. Now after the 3 years time period has finished, so the entity, that is the payment system operator, that now has like the certificate of authorization has been cancelled now. So now this is the entity, that is not further the payment system operator. So the entity shall submit the status of outstanding amount, that how much amount is left in the escrow account, to RBI. So this information has to be shared to the RBI after the 3 year time period. Now the last point is that the cooling off period. Let's say that your registration, the authorized payment system operator whose certificate of authorization is revoked or not renewed for any reason, or they have voluntarily surrendered their certificate, or let's say the application for authorization, the entity sent the application of authorization for the payment system operator, but the entity's application has been refused by the RBI due to any reason, that the fit and proper criteria is not being fulfilled, or there is some other reason. New entities that are set up by promoters involved in any of the above categories that have voluntarily surrendered the certificate of authorization or such. So basically, if you have voluntarily surrendered your certificate of authorization, if your certificate of authorization was revoked or cancelled, or let's say that the application of your authorization has been refused by RBI, so now there will be a cooling off period of 1 year. RBI may impose a cooling off period of 1 year. That means you cannot, if you are under any of these categories, so you cannot send a new application for a period of 1 year. So during the cooling off period of 1 year, the entities that are under this criteria, they shall not be allowed to submit an application for operating any payment system under the Payment and Settlement System Act. So the cooling off period is 1 year. The cooling off period is 1 year. Okay, that is the idea. Yes, the applications are through the Prava portal, Avnish. Okay. So any confusion? Cooling off period is clear. The RBI may impose a cooling off period of 1 year in the following situations: if the RBI has cancelled the certificate, if the RBI has revoked the certificate, if the voluntary surrender of the certificate has happened. So for the 1 year time period, the entities shall not be allowed to submit an application for operating any payment system under the Payment and Settlement System Act. Now additional information, see promoter. The promoter is a person, together with his relatives, who, by virtue of his ownership of voting equity shares, will be or is in effective control of payment system operator. Now, what is the promoter group that we have discussed in brief? But here you will see the promoter group. It includes promoter and related persons. Okay, so promoter, relatives of the promoter, where promoter is a body corporate. So promoter can be a body corporate, or promoter can be a company, basically. It's holding. So basically, where promoter is a body corporate. So in the promoter group, the promoter comes, the promoter itself comes, the relatives of the promoter comes. If the promoter is a company, if a promoter is a body corporate, the holding company or subsidiary of the promoter, the companies holding 10% or more than 10% in the promoter, or where the promoter holds 10% or more than 10%. So that means the companies that are having the substantial interest or the major shareholding, the companies that are having the major shareholding in the promoter company, in the promoter's body corporate, or let's say the promoter's body corporate is having the major shareholding in the company, that is 10% or more than 10%. So these kind of companies will come under the promoter group. Companies having common significant shareholders, where both the entities have the same group of individuals or companies or combinations that are holding 20% or more than 20%. If the promoter is a body corporate with a joint venture or associate with the promoter, or if there is a related party of the promoter, that means they belong to the same group, like the Geo Financial, Reliance Telecom, they belong to the same group. Okay, Reliance Power and such. Where promoter is an individual, any body corporate, where the promoter or relatives of the promoter hold 10% or more than 10% of the equity, or a firm or Hindu undivided family in which the promoter or any one or more of his immediate relative is a member. So all of these companies, they will come under the promoter group, where the promoter has the interest, or the company that has interest in the promoter, or the company that has interest in the promoter's company. Other included entities, persons declared as promoters in article of association of group companies. In the group companies, let's say the payment system operator, the entity that is the payment system operator, it has the group companies. So if there are promoters in the group companies, so they will be considered in the promoter group of the PSO also. Persons whose shareholding is aggregated under the SEBI disclosure requirements, or entities sharing a common brand name and such. Now the financial institution, the scheduled commercial bank, the financial, the foreign institutional investors, the foreign institutional investors or mutual fund, they are not treated as part of the promoter group if they have merely invested 10% or more than 10% of the shareholding in the promoter or the promoter company, unless the investment is strategic in nature, where the entities, where these financial institutions, they are willing to have the controlling interest, or where they want to have the long term interest. Okay, so financial institutions, scheduled commercial bank, foreign institution investor or mutual fund, they are not treated as part of the promoter group, merely just if they are investing 10% or more than 10% in the promoters body corporate. Okay, if the promoter is the body corporate or such, unless the investment is strategic in nature, because these institutions or the mutual fund, they invest just for the profit sake, they do not want any control. The foreign institution investors, they might be only investing for the profit sake, they do not care about uh, the working of the company, they do not care about the control of that company. Okay, so in this case, this is the idea, this is the exception. Chalo, any confusion, anyone? Ma'am, should we read RBI circulars for NABARD as well? No, there is no need to read all the RBI circulars for NABARD, only the important ones that are related to your syllabus, like the Digital Payment Index, Financial Inclusion Index, such kind of RBI circulars are important, not all. So if anything is related to the digital payments or the payment system, like that becomes important for NABARD also, but not very detailed directions, just the major indexes. If a payment, now coming to the questions, no confusion? Okay. So here I have also explained you that the promoter or the promoter group, okay, promoter group, a promoter can be a body corporate, promoter can be an individual, and any entity related to the promoter as a body corporate related to the individual, so they come under the promoter group. If a payment system operator voluntarily surrenders, so if a payment system, let's see the questions now. If a payment system operator voluntarily surrenders its certificate of authorization while liabilities to customers remain unextinguished, it must do what? So, if a payment system operator is voluntarily surrendering its certificate of authorization while liabilities to customers, merchants, agents remain present, it must do which of the following? Okay, so that is the first question. Second is, under the RBI master direction on authorization of payment system, the cooling period that may be imposed on certain entities before they can reapply for authorization to operate a payment system is what? What is the cooling off period timeline that may be imposed? See, it is upon the RBI that wants to impose the cooling off period or not. Okay, so but the cooling off period will be of what timeline? that you have to tell. New investors from or through non-compliant FATF jurisdictions, whether in existing PSOs or in entities seeking authorization as PSOs, are not permitted to acquire directly or indirectly significant influence in the investee PSO. That means the fresh investment from such jurisdictions in aggregate should account for less than what percentage of the voting power. So, a easy question. If you have heard the directions, you will be able to answer. Just read it once more. Read the directions once more so that you have the clarity. Okay, and this PDF will be provided to you in the Telegram channel as soon as the Telegram channel starts operating again. So the PDF will be provided to you in the Telegram channel of EduTap. So this is the idea. Chalo. So if there is no confusion, I will be closing the session now. Thank you everyone. Thank you for joining. So I hope this is clear to you, and just read it once more. The important points have been provided in the direction. Okay. Chalo. This is it. Thank you everyone. No confusion, right? Okay then. Thank you everyone.